Monkey want to make money from stock market. Monkey watch financial news. Big words everywhere. Price to earnings ratios. Market volatility. Quantitative easing. Monkey brain make dial-up internet noise. But then monkey discovers secret. Wallstreet make investing sound complicated on purpose. Keep regular monkeys away from banana tree. What if monkey tell you there's simple formula that beat market for 20 plus years? Just 2 numbers. That's it. Ready to make Wall Street cry? Meet Joel Greenblatt, monkey. Joel Greenblatt, not your typical finance monkey. He wear normal clothes, speak normal language, make complex investing simple. His hedge fund average 40% returns for 20 years. S&P 500 average, only 12%. Wall Street hate him. One simple trick make investing profitable. But here's kicker. He gave away his secret formula for free in tiny book anyone can read. Why? Because even when people know formula, most monkeys too impatient to follow it. Rotten banana alert. Knowing formula easy, following formula hard. The Wall Street scam. Financial industry want monkeys to believe investing complicated, need expensive advisors, complex strategies, daily trading. Truth? Wall Street make money when monkey trade frequently. Every trade equals fees for them. They want monkey dancing in and out of stocks like monkey at disco. More dancing equals more money for Wall Street. Best strategy for regular monkey? Buy good companies cheap. Hold forever, ignore noise. But this make Wall Street sad. No fees from buy and hold monkey. So they create 24/7 financial news, scary headlines, complex terminology, keep monkeys confused and trading. The magic formula revealed. Ready for mind-blowing complexity? Here's entire strategy. Number 1, find companies with high earnings yield. Number 2, find companies with high return on capital. Number 3, buy companies that rank high in both. Number 4, hold for 1 year. Number 5, repeat. That's it. No PhD required. No complicated charts. No crystal ball needed. Earnings yield. How much company earn compared to stock price? Think, how much banana does monkey tree produce compared to cost of tree? Return on capital. How efficiently company use money to make more money? Think, if monkey give company 100 bananas, how many extra bananas they create? Want cheap companies that also great at making money? Simple. Why this actually works. Reason 1. Most investors emotional, not logical. When stock price drop, monkeys panic sell. Company must be terrible. Reality? Sometimes great companies have temporary problems. Stock price drop, but business still good. Reason 2. Wall Street focus on short term. Quarterly earnings, daily stock movements, this week's news. Magic formula focus on long-term business quality, much better predictor of future success. Reason 3. Human psychology broken for investing. Monkeys buy when price high, FOMO. Sell when price low, panic. Formula force monkey to buy cheap, ignore emotions. Reason 4. Most smart money can't use this strategy. Big institutions have too much money. Can't buy small companies without moving price. Regular monkey have advantage. Can invest in smaller, overlooked companies. Ripe banana alert. Being small investor actually advantage. The backtesting proof. Greenblatt test formula on 20 plus years of data. Results? Formula beat market almost every single year. $10,000 invested in S&P 500 in 1988 to $54,000 by 2009. Same $10,000 using magic formula? $261,000. That's 5 times better, just from following simple ranking system. But past performance not guarantee future results. True, but 20 plus years, pretty good sample size. Formula work because based on fundamental business logic, not market timing. How to actually do this? Step 1. Go to free website, magicformulainvesting.com. Step 2. Enter market cap minimum, $50 million, good start. Step 3. Get list of top-ranked companies. Step 4. Buy 20 to 30 stocks from list, diversification important. Step 5. Hold for 1 year minimum. Step 6. Sell and repeat. Important, don't cherry pick. If monkey only buy companies they like, formula stop working. Most buy entire portfolio, even companies that sound boring. Sometimes best investments come from companies monkey never even heard of. Portfolio example, boring chemical company, obscure software firm, regional bank nobody care about, manufacturing company with ugly website. Beauty contest, this is not. Probability contest, this is. Why most monkeys fail. Formula's simple. Following formula hard. Why? Problem 1. This company looked terrible. Yes, many companies in list have problems. That's why they cheap. Market already know about problems. Price reflect fear. Problem 2. My stock's going down. Individual stocks in portfolio will lose money. Some lose a lot of money. This normal. Portfolio as whole should outperform over time. Problem 3. Formula not working this year. Some years magic formula underperform market. Could happen for several years running. Most monkeys quit right before strategies start working again. Problem 4. I found better stock. Monkey brain think it's smarter than systematic approach. Want to improve formula with personal opinions. The patience game. Greenblatt honest about difficulty. Formula work great long term. Terrible short term. Most monkeys want instant gratification. See red numbers, panic, sell. See green numbers, get greedy and change strategy. Success require patience of Buddhist monk. Buy boring companies, hold through volatility, ignore financial news, repeat for years. Boring, yes. Profitable, also yes. Common monkey mistakes. Mistake 1. Trading too frequently. Magic formula require annual holding period. Selling early, destroy returns. Mistake 2. Position sizing wrong. Need 20 to 30 stocks minimum. Putting everything in 3 stocks equals gambling, not investing. Mistake 3. Timing the market. I wait for better entry point. Market timer end up buying high, selling low. Mistake 4. Adding personal opinions. This company CEO looked trustworthy. Personal feelings make portfolio worse. Mistake 5. Quitting during bad years. Every strategy have bad periods. Winners stay disciplined during tough times. The psychology problem. Humans terrible at investing because emotions override logic. Fear. Market crashing, must sell everything. Greed. This stock's up 50%, must buy more. Pride. I smart, I can pick better stock. Regret. I should have bought Apple in 2001. Formula remove emotions from equation. No gut feelings, no market predictions. Just follow numbers. Like GPS for investing. May not always take prettiest route, but get monkey to destination. Alternatives for lazy monkeys. Don't want to pick individual stocks? Understandable. Stock picking time-consuming and stressful. Option 1. Buy index funds. Not as good as magic formula, but better than average investor. VTI or VOO, good choices. Option 2. Value investing ETFs. Some ETFs try to capture value premium without individual stock selection. Option 3. Pay someone else. Hire fee-only financial advisor who understand value investing principles. But remember, every middleman take cut of bananas. The broader lesson. Magic formula just one example of bigger principle. Systematic beats emotional. Whether investing, dieting, exercising, or learning, following proven system beats trusting feelings. Feelings lie, systems work. Most monkeys know what to do. Problem is actually doing it consistently over time. Real talk. Will this work forever? Maybe, maybe not. If everyone start using magic formula, advantage could disappear. But Greenblatt been sharing strategy for 15 plus years and still working. Why? Because most monkeys too impatient to follow boring systematic approach. They want exciting stories, hot tips, market timing strategies, not boring value investing. This monkey psychology unlikely to change anytime soon. Your action plan. Step 1. Read actual book, only 150 pages. Step 2. Paper trade formula for a few months. Practice without real money. Step 3. Start small with real money. Step 4. Add more over time as comfort level increases. Step 5. Ignore financial news for next 20 years. Most important, start. Analysis paralysis kill more investment returns than bad stock picks. Conclusion. Wallstreet want monkey to believe investing rocket science. Truth? Basic math plus patience equal long-term wealth. Magic formula, not magic, just systematic way to buy good businesses at cheap prices. Will monkey have discipline to follow boring strategy when market going crazy? That's real test. Fortune favor patient monkey. Monkey trying magic formula or sticking with index funds? Comment below. Which investing strategy monkey wants to learn about next? Remember, time and market beat timing market. And remember, apes together strong.